XRP and Ethereum story. Simple version. What we're seeing right now is amazing for both XRP owners and Ethereum owners. The crypto world is moving in a way that's setting up what could be one of the biggest money moves in 10 years. Ethereum is getting all the attention right now. And when that happens, history shows us the rest of the other coins, especially XRP. Don't just follow along. They go crazy high that you're about to see why this moment is so important and how what's happening with Ethereum today could make XRP shoot up like never before. This isn't advice on what to do with your money. Right now, tons of money is flowing into Ethereum. And if you've watched this market long enough, you know what comes next. The big money players, the big companies, they ride the wave until Ethereum hits their target price. Then they take that money and put it into the next big winner. That's when we see total craziness across all the other coins. This is why I'm making this video today, because the signs are showing we are close, very close to that turning point. And before we talk more about what Tom Lee just said about Ethereum's path and why it matters for XRP's next big move, I need to show you something huge. Down in the pinned comment, you can grab the ultimate guide to become a millionaire investor and find stocks that could make you 100 times your money. This is a complete guide with papers, pictures, videos, and step-by-step tips to find the kind of investments that can change everything for you. It's made to be so good you'd be silly to pass it up. And while you're there, also grab your free NVIDIA stocks worth up to $1,000 from a $100 deposit using my Moomoo link. That's a no-brainer way to get in position while you still can. Now, back to Ethereum. Just last week, Ethereum broke through $4,000. And as I'm recording this, it's sitting around $4,200. That completely smashed the $4,000 price target Tom Lee predicted earlier this year. And while Ethereum's run has been incredible, XRP has been quietly cooling off, pulling back just enough to set up for its own next big jump up. This isn't a bad sign. It's a perfect, healthy pullback before the momentum builds again. Tom Lee's view here is really interesting. He pointed out that in the short term, Ethereum's fair price doesn't necessarily control its actual price. There are liquidation levels being targeted, traders running pair trades, and short-term bets against Ethereum that end up creating even more ups and downs. But here's the big lesson. Lee believes Ethereum is having its Bitcoin 2017 moment right now, with Wall Street finally getting fully behind it. Why does that matter for XRP? Because this is exactly the setup we saw before in December. Ethereum hits a key high, big company money starts taking profit, and the next wave of money flows into other top coins. XRP is right at the front of that line. If Ethereum finds its top, likely within the next 30 days, there's a very real chance of a huge wave of money crashing into XRP. This pattern isn't guessing. It's happened before. And when it happens fast. When the tide changes, the money doesn't trickle. It surges. We saw it in previous cycles, and the setup right now is scarily similar. But the story doesn't end with Ethereum's price action. Tom Lee went on to talk about the massive importance of staking and treasury management in Ethereum's world. He compared Ethereum accumulation rates to what MicroStrategy has done with Bitcoin. In just 5 years, MicroStrategy grabbed 3.2% of Bitcoin's circulating supply. Now imagine a company like BitMine doing the same thing for Ethereum, but at 12 times that speed. That's exactly what's happening. And it's happening under a fully legal framework that Wall Street loves. Why? Because Wall Street wants their exposure to Ethereum done in a way that's legally perfect, transparent, and follows US rules. And as Lee pointed out, Ethereum isn't just another crypto. It's positioned to become the main blockchain for turning real-world things into tokens from money markets to stocks. That's why the big institutions are swarming in. But here's where the turn comes. Ethereum's technology is good, but it's not the best. It's not the most efficient. It's not the cheapest to make transactions on, and it's certainly not the fastest. Technologies like XRP's ledger offer unmatched efficiency, almost instant settlement times, and super low fees. For everyone to use it, these are not optional. They are critical. Right now, Ethereum is the shiny object for Wall Street. They're piling in because it's the familiar name, the safe bet in the crypto space. But markets change. Once the hype dust settles and the real performance numbers are compared side by side, money starts to look for better technology, that XRP's better transaction speed, cost efficiency, and ability to handle lots of transactions make it the natural next step when institutions start moving their money around. And here's the kicker. This reallocation could be sped up by one single event. XRP spot ETF approvals. With September looking like a possible launch point for these ETFs, we could see regular investors flood in first, creating a spike in demand that institutions can't ignore. That's when the snowball effect kicks in. Money pounds, price action explodes, and the cycle feeds on itself. Ethereum will always have its role, but it's not the final blockchain. It's the current staging ground. And while Wall Street is busy setting up shop there, the smart money will be watching the assets that can actually support a global financial system in real time. Assets like XRP, that what's happening now isn't random. It's the same market psychology that's played out over and over. Money concentrates, peaks, and then rotates. And when that rotation happens this time, XRP isn't just going to catch some spillover. It's ready to be the main target. Lee also emphasized that Ethereum treasury companies are critical infrastructure, not just passive investments. These are companies earning staking rewards while serving as structural support for the network. But even that doesn't change the fact that XRP's ledger is better suited for certain high-volume, low-cost global transactions that Ethereum simply can't match efficiently. And when institutions start doing that math, they'll want exposure, not years from now, immediately. This is why the next 30 days are so important. Every day Ethereum climbs, we get closer to the rotation point. And when it hits, the shift in money could be one of the fastest and most violent we've seen in crypto history. I can keep going deeper into Tom Lee's insights, but the real takeaway is this. Ethereum's dominance right now is setting up XRP's launchpad. We've seen it before, and all the pieces are lining up for it to happen again. Only this time the scale is bigger, the players are bigger, and the stakes are much higher. Now, here's where it gets really interesting for XRP holders. Tom Lee's description of Ethereum as the compliant Wall Street-friendly blockchain is spot on for the current moment. But the institutions loading up on Ethereum today are not doing so blindly. These are the same firms that rebalanced aggressively after Bitcoin's major runs in the past, and they will do it again here. When they've gotten maximum profit from Ethereum, they'll pivot fast to the next highest quality asset with the greatest chance for huge gains. That's when XRP will be standing in the spotlight. Think about what that means. Wall Street money, hedge fund money, and sovereign wealth money moving in together. These players don't enter small. They hit positions that move entire markets. And when you combine that kind of money with the efficiency of the XRP ledger, it's a perfect storm for explosive price action that we saw hints of this back in December, exactly as Tom Lee reminded us. Ethereum topped, cooled, and suddenly XRP was ripping higher as money spilled over. This time, the cycle is turbocharged. More ETF access, more compliant infrastructure, more public awareness, and a far bigger base of crypto investors ready to jump in. And let's not forget, the approval of an XRP spot ETF could serve as the spark that lights this entire fuse. Once regular people see that ticker available in their brokerage accounts, the money coming in won't wait for headlines. It'll start immediately. Institutions will see that volume, interpret it as surging demand, and that will speed up their entry. That's how a snowball turns into an avalanche. While Ethereum will still have its staking rewards and tokenization plays, it's going to be difficult for Ethereum to keep outperforming once money starts looking for the most efficient settlement layer on the planet. That's where XRP shines. You don't have to convince people about the technology when it's already doing in seconds what other chains take minutes or hours to settle. Tom Lee also pointed out that Ethereum treasury operations are more than just holding coins. They're building financial infrastructure. That's true. But XRP has the advantage of being purpose-built for high-speed, low-cost transfers at a global scale. The ledger's design isn't trying to be everything. It's trying to be the best at one thing: frictionless value transfer. And in a multi-trillion-dollar global payments market, that's exactly the kind of specialization that wins. And when you add the fact that capital markets are hungry for yield, XRP has a further edge. While Ethereum staking rewards are attractive today, they can get smaller over time as more Ethereum is staked. Meanwhile, institutional use cases for XRP, from cross-border settlements to liquidity providing, can generate yield like